if Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology. It's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold. As long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage. Whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. And, that remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize.
The world economy isn't crashing all at once. Rather, it's breaking apart on the inside. Inflation is merely the sign. The illness is a system based on constantly growing debt. Instead of solving the issue, central banks are making it worse, printing money to keep governments running at any cost, to fund huge budget deficits, and to save banks. Lyn Alden cautions that this is not a coincidence. It's structural. Year after year, crisis after crisis, fiat currencies continue to exist by stealthily draining purchasing power. Additionally, money loses value and asset prices rise further out of reach each time governments choose for bailouts rather than discipline. Bitcoin is important for this reason. According to Alden, Bitcoin offers an escape route from a collapsing monetary system rather than merely a speculative investment. It is decentralized, worldwide, and impervious to inflation politics. It still only takes up a small portion of the global money system with a $2 trillion market capitalization. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
I think it's still one of the key things that's driving them, probably one of two. I mean, the other one is basically that in the modern age, the foundation of what fiat currency is the liability of a central bank. So they're the foundational ledger that they currently run on, and they obviously control the size of that ledger. They normally increase it, they can occasionally decrease it, and so that's kind of their first purpose. And then the second purpose is they want to run that own ledger themselves rather than rely on a ledger they can't control, like gold or Bitcoin or something. Because if there's a problem with the amount of debt units in the system, then rather than letting the debt units go down, which can include government bonds, basically instead of letting them default or otherwise have a disorderly thing, they just print more units. And so that's still a key thing, is funding the sovereign. And we saw it, as recently as 2022 during the UK gilt crisis. They had a major problem with their bonds, and the central bank, Bank of England, they had a speech planned about balance sheet reduction, and they literally canceled it and increased their balance sheet to fix the bond market problem. And then, that was a temporary thing. They eventually went to balance sheet reduction after they kind of cleared the leverage out of the system and kind of bailed it out. But the point is they can step in whenever there's disorderly bond issues, and they can kind of choose what is the release valve going to be. If the government's spending too much money, they can let yields go up. They can let kind of the bond vigilantes and supply and demand kind of, flail in the wind for a while. If it becomes too much of an issue, then they can step in and say, well, now we're going to put some of the release valve into the currency itself, because we're going to suppress yields. We're going to, print more base money to buy bonds, whatever they want to do. And so it gives them a lot of flexibility, which I argue is not a good thing. But that is, from their perspective, that is, one of the reasons they exist. And another thing is that they would deny that. So most central bankers, if you ask them, is one of the reasons you exist to fund the sovereign, almost always they would say no. It's an uncouth thing to say. Maybe some retired central bankers tend to be a little bit more flexible with how they say things. Yeah. Not all of them, but some of them. So they would deny that. They would go on about how they're trying to run stable monetary policy. They want to make prices gradually more expensive year after year, and that's kind of their purpose. But behind the scenes, funding the sovereign is one of the apps, like the top 2 or 3 things that they do. Well, before the kind of the modern era, so the post global financial crisis, they weren't necessarily funding the sovereign too much. Basically, after World War II ended, there's this long stretch where we didn't really have a lot of central bank directly funding of the government. Instead, it was more like managing these private sector credit things. Now, the big criticism is that they cause those cycles as well. They're not just, so there's anything has cycles to it. So even without a central bank, cycles do come and go. There's just kind of human herd behavior that happens, and momentum shifts and things like that. But then from their perspective, they're trying to kind of be counter-cyclical. They're trying to like stimulate during a downturn and kind of hold things down during a bubble, with the problem that they often their actions generally lead to the next bubble. So for example, after the dot-com bubble, well, actually in the middle of the dot-com bubble, when long-term capital management had an issue, they provided liquidity into the market. And then in addition, it was the upcoming Y2K issue, which is now 25 years ago, but people were worried about clocks, hitting 99 and going to 0 and causing an issue. So they were worried about outages and stuff. So they front ran liquidity into the market in the late 1990s. And that contributed to the dot-com bubble on the upside, combined with the exuberance of new technology and everything else. So they weren't the only cause, but they just poured some gasoline onto the already raging fire. And then as the recession happened and as the dot-com bubble melted and everything, in something like 2001, they came out and cut interest rates all the way down to 1%. And they inflated a property bubble, which then blew up, 7 years later. And so they end up being more pro-cyclical, I would argue, than counter-cyclical. I think a lot of it is the sacrifice of the long-term for the short-term, which again, they wouldn't agree with. But basically, they're always kind of putting out the current fire. So it's like if there's a recession, it's like the main
arsonist.
thing is get out of the recession. If it's too hot, it's like suppress it. And basically, what they're always trying to do is make sure that total credit keeps going up. In my recent talk at the Bitcoin conference, I pointed out that in like 100 plus years of history, there's only been 5 down years in the amount of total credit in the U.S. 4 of them were in the Great Depression. One of them was a 1% drop in 2008, and they just find that completely impossible. So they just jump in and make sure private credit's always going up, or the combination of private and public credit's always going up. So they're always trying to pull forward stuff from the future. They're always trying to don't stop consuming because that's bad for the economy. It's keep consuming. If consumption's too low, keep consuming. It's this kind of treadmill that they're always trying to keep the economy on. They would argue that the net positive that is good, that the economy's faster because they're doing this, even they might have some flaws. Whereas critics, and I'd be more in the critic camp, even though I do try to steelman their argument to make sure I understand it, but the critic camp would be that it's more detrimental than not. And I think it ultimately comes down to most economists don't think that price controls are good. That the market should set prices. And what central banks do is they set the price of credit. And kind of more fundamentally, the price of money, but basically the price of credit. So their decisions, a small group of individuals, has rippling implications for the entire market. And every time they're wrong, that can affect millions of people.
Central banks have been quietly advancing the goals of governments and empires for more than a century by inflating prices rather than increasing taxes. Rarely do nations ask their citizens to pay directly when they need money for wars or to cover massive deficits. According to Lyn Alden, fiat money is not a neutral instrument. Regardless of the financial or personal costs, it is intended to forward political objectives. The majority of people are unaware of how this system actually operates. The credibility of the currency declines with each new dollar that is printed. The wealthiest get richer and everyone else gets poorer with each interest rate cut or bailout. This explains the significance of Bitcoin. It's more than just an investment, it's a means of avoiding a manipulative system. Bitcoin cannot be used as a political weapon or printed into oblivion due to its decentralized network and fixed supply. Bitcoin only gets stronger as long as central banks keep printing and devaluing fiat money. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So are we still too early in this journey, or what is your sort of belief there?
Oh yeah, Bitcoin at 2 trillion market cap is completely irrelevant for nation states being able to engage in war. We live in a world where there's about 1 quadrillion in total assets. So it's like 1,000 trillions. And, the U.S. bond market is 36 trillion right now, 37 trillion. Global sovereign bond markets are, tens and tens of trillions, maybe 100 trillion. Global money supply is over 100 trillion. Bitcoin's a drop in the bucket. So right now, doesn't mean it's not solving a problem. I mean, if someone gets locked out of payment rails or they want to hold money that's not being debased, it's serving millions of people. But it's at its current scale, it has very little impact on nation states. Nothing short of being 10 times or more bigger would start to affect that. Basically, when a meaningful percentage of the population would rather hold Bitcoin than hold a fiat currency, that's when it starts to matter. When it starts actually taking away seniorage from the nation state, which doesn't happen at a $2 trillion market cap today. That's 0.2% of global assets. You need to start getting into the whole integers, at least. I mean, ideally double-digit integers. So basically, until it's kind of like a new foundational type of money at scale, then yeah, it's a different discussion. And these things inherently take time. But you're going against an absolutely massive network effect. This is both a self-sustaining network effect, and then it's also a nation-state endorsed network effect. So it's absolutely massive. And this like open source network has to bootstrap from zero. And to the extent it's successful, it's going to take a very long time. And it can even take so long that people have to just kind of grow up with it and it's around, rather than making the active decision to transfer to it. If Bitcoin stays decentralized and secure, which is basically, so we're 16 years in this technology, it's been tested in multiple ways. It's very anti-fragile, but it's not necessarily invincible. So to the extent that Bitcoin as a network is not kind of corrupted, captured, neutered in some way, as long as it just kind of keeps functioning the way it has been, I expect it to keep taking market share up to a very high level, because it's as fast as fiat currency, but harder than gold, as long as, again, it continues to operate the way we expect it to. And so I do think that eventually it does eat into major nation state seigniorage. Whether it's 100%, like it just completely invalidates the existence of fiat currency, or if it takes like half of it away by basically constraining them more, by giving them a much faster alternative that people can go to. And, that remains to be seen. We already, the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and everyone learns you just can't hold currency and bonds of this country. And so that country massively loses a lot of its seigniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna use the dollar as our currency. That's happened to a handful. Bitcoin can do that to stronger currencies over time when it's bigger and more liquid. So we have a model in place, and we have this kind of long-term incentive to. There's really no reason to hold currency or bonds other than either one as the near-term working capital, like your checking account, basically to kind of pay bills in the current fiat era. It's like a hot potato. You use fiat currency but don't really hold fiat currency. Or if you're a trader, sometimes it's a volatility reduction. That's why it's still useful, because it's stable, at least developed market currencies. So if you want to reduce volatility, it can be useful, but for the most part, it's not that useful. And as Bitcoin gets bigger and less volatile, it keeps eating into the reasons why you'd ever want to hold fiat currency for more than just a couple months worth of capital.
According to Lyn Alden, Bitcoin is still minuscule in comparison to the global financial system at the moment. With an estimated 2 trillion market value, Bitcoin hardly affects the capacity of nation-states to do business or fight wars. Global assets are approximately $1 quadrillion, the money supply is more than $1 trillion, and the markets for sovereign bonds are tens of trillions. Bitcoin is nothing in comparison to that, but that doesn't negate the value of Bitcoin. Millions of people who desire money that isn't being devalued, or who are unable to use conventional payment methods, already benefit from it. However, in order for governments to be genuinely impacted by Bitcoin, it must be at least 10 times larger, and a sizable portion of the populace must choose it over fiat money. It would then begin to limit a government's capacity to make money through the issuance of currency. Building a new global monetary network from start is a tremendous effort. Thus, she claimed this growth will take a long time. Instead of actively switching, people may eventually adopt Bitcoin gradually by just growing up with it. Similar to how people in failed economies switch from their falling currency to stronger ones, like the US dollar, Bitcoin may eventually limit the power of governments over money. Countries that experience hyperinflation frequently lose control over their own currency and become dollarized. As Bitcoin grows bigger and more liquid, it may eventually do the same to even more powerful currencies. Because fiat is reliable, people will continue to use it for everyday transactions in the interim, but they may not save it for the long run. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.